Steps to create a beginner-friendly swing trading watch list. Well, we have some pre-selected stocks to our watch list here, and we are going to analyze them to see if any is good to make it to our 2026 watch list. The first one we are going to analyze is D. We are going to use maximum monthly chart to analyze it, and D, we are going to trace support line passing by the valley of the mountain, and we want that support line to be uptrending. So that shows us that the valley line is getting taller and taller, like we are having higher lows at the valley line. And we have this one. Now we are going to see if the tip of the mountain is getting taller and taller. So as we look here, yes, it's getting taller and taller every few years. We have a dip here, and then it got taller about 2 years later, and then about a year and a half or so, and so forth. But from here to here, it didn't come back down to the valley line here. It just continued going higher and higher all the way to the pandemic, and then it went a little bit higher here, but this was the highest point, and then it came back down and then start going up again. So from here, let's see, this one ended there pretty much, and we can see the date is on the x-axis from the past to the present, and then we have the price on the y-axis from $0 up. Yes, we are having taller mountain at the top, and we have higher lows at the valley, but it takes a while before it will come back down to the valley. So we have the years that was at the dotted line. We can count it here: 1, 2, 3, 4, 5 years or so to go up, and about a year to go down. So when we count this one here is 1, 2, 3, 4, 5, 6, 7, 8, 9 years to go up, plateau a little bit, and then came back down about a year as well. And right now is living here, and he left it about 2 years now. And if we want, based on the strategy is using, this will be more classified as a valley line, as a short-term investment. When I say a short-term investment, yes, it's at the same time a long-term investment, but does that mean that we are not buying it to keep it forever in the portfolio? But that is the one thing that we are going to invest in, because once we buy it, we are going to keep it for some years before we resell it. Because it can continue to grow for some years before it will pull back, and it left here already, I will say it's still time for us to get in, because to find it again here will be a while. So therefore, it will be okay to buy some share somewhere here where it is, if you are interested in it. This may not be a one to swing trade, but it'll be a one to invest in, because when it leaves this valley line, it can continue going higher high for a while. Excuse me. And it tends to, if there is a pattern here, is around economical crisis, it will pull back down to the valley line, and then we will start going up from there. So when it pulled back down during the recession of 2008, and then start going up from there, it continued going up until we reached the pandemic, when it plateaued, and then after that it pulled back down and started again. We can see what it does, this company, but clearly it seems to be, it has a real pattern here. So, and because if it's going to repeat this pattern, chances are, it's going to be going up for some years before we'll find it again at the valley line. So for that reason, since it left the very line not too long ago, and it still, let's see, it pulled back to this support line that is claiming, I can even go this way, it'll go higher up to it if I wanted to connect it to this, or I can move this a little bit up. Is somewhere right there. We can buy a share of it and just let it be, and knowing that this is going to take some years, if not a decade, to continue going up before it'll come back down. Another things we can, so that could be a buy if you like it, to buy a share since it's already left that area 2 years ago and could continue for at least 3 years going up. So when we look at it here, is at 59 right now, and that's something that can get to what, is it 80, 84 or so, 84. So 84 and 59, you have about $25 difference there. That's something to consider. Those stocks that have growth in them, they can make that difference within a year. But again, those stocks cost more as well. That is something to consider. This is slow growing, and usually those stocks that cost less, I noticed that the growth is kind of small, like dollar wise, not necessarily moving wise. So, but I think there are some stocks that cost less but can show more growth. So this is kind of a stable one, grow slowly and then pull back. So this value line, it has been touching base with it constantly every few decades or so. And but again, it will take a decade to accumulate $25 profit per share. So if that's something you are interested in, you can buy a share around $50 and hold on to it and sell it after a new high is, no, not after the new high is reached, because that new high is going to get reached, but it's going to continue going up. So you just have to see, you know, how long you are going to stay in. And since it has something related to recession as well, maybe when we get to the next one, you start seeing it going down, you might decide to just get out of it, especially if it breach the support line that is claiming, that is supporting the upside wall of the mountain. It tends to touch base with it and continue going up. So if it breach it, you could get out of it as well. But that is something to consider. Otherwise, you use the number of years that it's going to continue going up, because sometimes we might say there is a recession. Some people might say there is not a recession. So it's not like you'll know if there is one. If you do not have a job, then you will believe you are in a recession. But if you have a job, you may not know there is one. I don't know if that's true, but during 2028, I didn't have a job. I was working different part-time jobs, looking for a job related to my degree, like around 2009. And it took all the way to 2014 for me to find a full-time job related to my degree. But between those, I work at different, I have different part-time jobs. So, but yeah, I think if you are in the middle of it, we may not know it until we pass. I really don't know. I don't know how we figure out that in 2008 to 2010 or why not, it was a recession. So I don't know. But the same could be said around after the pandemic as well. But did we get to a recession? I'm not entirely sure. And if that is the case, like 2005, 4, 3, 2022, it pulled back. So does that mean in 2022 we experienced a recession all the way to 2023, because that's when it tends to dip. So again, I don't know, and it start going up from there. So if you're interested in it, you can buy a share and experience it and see if that's a stock you're interested in. So it's not a no per se for this one, and it's just like some stocks can give us about the same amount of return in a shorter period of time, pretty much. So let's go back here, and I don't know if you want to take some notes, and I can just put, and I can just say that takes a decade or so to grow, and about a year or so to come down to the valley. Drops to valley around recession. That is just my opinion, my observation. May not necessarily be accurate, but that is that. Okay. And we can put it down that, estimate profit to be $25 per share Okay, so here we can put short-term investment for it, and if we are interested in it, now will be the time to buy. Because it's already left the valley line 2 years ago. Another one is ED. But first, let's go and see what the is about. Okay, it's a utility company. Okay, ED. So ED, we see this growth there at the valley line, and when we look at the tip, it's getting taller and taller every year or so. And then they pull back and then get taller, and then pull back and get taller. Right now it's going down to the valley line, but it's not there yet. So yes, for 2026 watchlist, do you see this one, for instance? The pattern is different from the other one, but yeah, and right now it seems to be crawling around this valley line. I don't know if you wanted to come back down to this. Here though, it took a while before it came back down to it. Just continue higher up here and pull back and continue again. So let's not forget about this one. We don't know if it's going to come back down to it or not, but for the time being, this could be a buying point. And those utility companies tend to be kind of stable. 1 second, I mean, we are in the US, so we have extreme weather, so I will say they have business. But anyway, it seems to be going down. We can wait on it. If it touch base before, we might buy some. But yeah, so let's come back down here, and I don't know, it's a short-term investment I'll put. It seems to be doing that every few years, so we can just put good stocks for it for now. So this one is PEG. PEG. Is it PEG? Yeah. So we have this valley line that is respecting and it took a while, a while before it exceeded this one here, but for the time being it was climbing up. From that point, every 2 years or so it's getting taller, and then it pulled back down again here, and about 2 years again it went up and went down, but didn't come down to it, and then start going up from there. So we are just going to keep observing it to see what it's doing. We are not going to do anything. We are going to wait to see if we will find out this valley. If we find out this valley, we can buy some, because it can crawl around that valley line for a while. It's just better we just wait on it, unless it's going to use a temporary valley line here. Since this one didn't touch base with this, I don't know if the valley line changed. It went a little bit higher up or not. So therefore I just prefer to keep observing it. If we trace it from here, it will go there. So we can keep an eye on those two to use as well. So this is not too far from the other, but yeah, and we can just keep observing it. And I can make this there as well. We are having higher highs, but because of the number of years that is between it, and then the way it can climb up for a while, we can put a short-term investment as well for it. Another one is WEC. So WEC is climbing up, and we have like higher lows at the valley, and we have higher mountain here. So you can see that even within that sector, some are better than others when it comes to the strategy we are using, like compatibility to that strategy. So this one is getting taller and taller, and then during the pandemic is plateaued there and came back down and then went higher. So it pushed this gap and went higher this year, and now it's start going down. So this is a good one to add as well. So it's a short-term investment. Let's see. Yeah, but I won't even put a short-term investment for it. I'll turn it to a good chart, and it's better than those two here. And DTE is the next one. DTE. So DTE, we have this valley line. We have this line that went across it, but then we have this line that is right there, and it didn't touch base with this one in a while. It just went all the way again, that same repetition we saw with the others. It took some years after the recession of 2008. It continued higher up for a while, and then it pulled back around the pandemic, went higher up and pulled back and went higher. At least it breached those peaks this year as well. So, and it's been going up. So if you pull back down, we might buy some share. So this year though, it took about 2 years or so, and it's pretty much now start going down. So we are going to keep an eye on it. When we see it here, we might buy some share. So it's going to be a short-term investment. It can take about 3 years or so, 1, 2, 3, 4 years or so to reach a higher, to breach it pretty much. So we can put it like that, but that is okay. This one is AEE. So pretty much those stocks, they are having a kind of unique pattern to their own, but at the same time similar pattern to that sector. That's something to consider as well. So AEE, we have it is trending up, is respecting this valley line, and then we are having higher mountain as well going forward, and this year is a higher there. So yes, to add it to 2026 watch list, and to buy it, we are going to buy at that value line, and right now it's not there yet. So let's come back down here, and we are going to put a good chart. The next one is CMS. So CMS, we have this value line here that it has not touched base with this year, and we have this growth here. Let's see, that went for decade, and then it pulled back down during 1999 to to 2002 or so, and then again we have those data lines that are years, and from there it start going up again. It reached all-time new high this year though, but the thing is this value line is not respecting it anymore, so we need to find the value line for it. So if we trace it from here, I'm going to activate it and move it to see where I can have multiple touch points. And then I can move this one down a little bit, not the whole things. In fact, if I went this route, it will go across it. It's not quite coming down to that valley line before leaving. So let's see if we can find another valley line. Trying to get closer. We have this one. Excuse me. So we have those multiple, because again we are not having a clear valley line here. But let's take a look at it. Is reaching a taller mountain every year or so. Excuse me. And it pull back down, and then start going up from there. Excuse me. What I don't like about it is this growth here, and then it pull back before going up. I'm not sure what happened, but when we are looking at it, it's upward, having higher mountain, and we have higher valley as well. Excuse me. So if we are going to buy, I just feel like this is just too close to the peak. So I don't know, I think I'll prefer to wait. If it comes back down to here, we can buy some share, but it's having a higher mountain at the top, so, and then it has all-time high this year. So the answer is yes to add it to 2026 watch list. And but I don't really like the fact that it grew up for years and then pull back down like this. So therefore I don't know if it's going to continue going up, and then there is a possibility it might come down here. So that is something to keep in mind, because if it does that, then it'll take about a decade before you will be able to breach the previous peak. It may not take that long, like here necessarily. But again, I just don't like it when I see those growth in the past and then a bigger dip later, and I'm not entirely sure what happened. So it can be traded, but I just prefer not to because of this history here. I don't know if that can happen, and since it's taking quite a bit of years to to surpass the previous peak. It's not like it's going to just do it within a year. If it comes back down here, for that reason, the answer is going to be no. Now to add it to 2026 watch list. And my fear may not be founded since it has short good growth here, but again, with this happen already in it, I prefer now to take that chance. There is so many stocks out there. It's not that we are missing we don't have stocks, therefore the answer is no. It'll be good to put a note there though, so that we can see why we say no to it. And the reason is going to be previous few decades of growth, and then a dip during 2000, during a dip between 1999 to 2002. So for that reason, no to back to watch list of 2026. So that is why we are saying no for it. It's not because it's a bad stocks, it's because of the previous, and now knowing the story behind it, we don't know if it's going to repeat itself again. So the next one we are going to analyze is NI. But if you are interested in buying it, maybe buying it around this value line could be a possibility. NI. So NI, we have this value line that is uptrending, that is climbing, and let's see the mountain. Again, they all have those type of issues. So it took a while for that to surpass this one, and after that it will just continue going higher up, and it came back down to this and then exceeded already, and came back down and exceeded again this year. So we are going to say yes to it. We have higher lows at the valley, we have higher highs at the top, and next time it comes back down to this value line, we might buy some share. So but right now is way higher up. So yes to add it to 2026 watch list. It's going to be a short-term investment type of stocks though. I don't think, yeah, or no, I'm not entirely sure. I think it can do that within 2 years, so we can just put a good chart then. So this conclude, how you can, view those stocks and make your analyze them on a maximum monthly chart to see the overall tendency of that company stocks chart, to see if it's uptrending, if it's showing growth for you to swing through it using long uptrend, long swing trading strategy. And when we analyze all of those, we say yes to all of them but this one, and they all are in the pretty much utility sector, and more precisely multi-utility sector. So thank you so much for watching our videos. We thank you very much for your time. Thank you for all your comments. We thank you very much for subscribing to our channel. I'm Afiavi Liberman, Growers of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. We organize a small group online workshop where you can practice analyzing stocks to see if a stock is well positioned for you to buy some share during the week. If you are interested, please check our online store liberdownload.com to reserve a spot. Thank you for your time. For more tips on how to create your own watch list, please check the playlist in the description of this video. Thank you.